Before I jump into this video, please do like, share, comment and subscribe. We traded in a hedge mode for a long time, as you will have seen on our channel, but now we're immersing everyone in the world of prop firms and using stop losses and using them correctly. And it's really great because we developed this over a very long time. So I'm going to run over some trades I just took and I've closed with some decent gains overall. It's the New Zealand yen and the AUD CAD. You will have seen in our last video I dropped out the dollar ZAR after a long move up. You could see some minor resistance coming on your daily time frame and into your 4 hour as well. So the drop off really gave me, the will to ultimately exit. So I took gains on that, about $800. So I'm just running up this 50k instant fund account so I can show you how to scale over time. So we'll jump into it now and we'll go over it, and you'll learn quite a few things about identifying entries and the fact that you really need to manage them if you want to get overall gains. Let's jump into it. So for another entry, I'm going to short this AUD CAD, really decent area we've got to now. What I like most really is the weekly position we find ourselves in. If you look at this very low down here at 84383 roughly, you really haven't stopped that much. You've got one sort of meager red candle there, but apart from that, it's up and away. You did have a stall on your daily for a period, which has somewhat denigrated the overall value of this trade, but there's still some margin to be taken there, and it still seems valid as a short overall. If you look across the board, you can see fell from here, fell from there, various other places this trade has bounced around from, but it all sits across the same key level for supply, essentially, for us. You can see the most recent fall came over here when you had a really big drop. So as well as that, your stochastic oscillator is coming up nicely, and this is shaping up now for what seems to be a decent short. If I take it at market value, I can put my stop somewhere around here, I'd imagine. I don't want to risk that much because it's a 50k instant fund, and I might actually add another position should this entry fail, because there is a little bit of room slightly higher in terms of levels. So what I may do, I've got two options. I could delay this slightly till 0.905, I would say, and stretch the stop up here, probably about 1,000 pips. The target I would put nearer this point down here, just a little bit lower under. Okay, so looking at about 100 pips there. So the trade I'm looking at today and my next entry post ZAR looks like it's going to be the AUD CAD. I like the level that we can see across the board. If you see, I've highlighted it a few times. Price has been very reactive around here for a sustainable period of time. It's fairly easy to highlight this across TradingView. The next notable area really comes slightly higher up. So there are two areas here, I would say, with your AUD CAD. So for that reason, I'd probably rather wait and see the reaction around this point, but set a limit order slightly above where we are to fill. So that's going to be about 0.905. It's about 20 pips higher. So we can change this to a pending order and we can put it somewhere in there. And I might decide to move that depending on how price unfolds going forward. But that is the limit order, and the stop I would just put above this level like that. Okay. The take profit in this instance, I'm going to pull fairly close, not terribly close, and I may move it, but it's likely it's going to sit around there somewhere. So looking for a move of, I would say, 0.905 down in here somewhere, maybe 100 pips or so to that end. But the stop looks well wide of where you would expect the price to be limited in terms of its journey, and therefore I'd be happy to set the limit there And again, like I said, I may move that limit and get short a little bit earlier. I do like this level across the board because you can see it's been very reactive many times over, but there is a little bit slightly higher that may also be reactive. So essentially what I've done is I've taken both of them more or less by wrapping the stop loss round. So I'll pull this out of the way a bit so you can see that it's mostly just the rapid increase, the week after week after week of green, and there's no forceful kickback. There's no big dip, which is essentially what we're trying to catch. And like I said, I think what you'll find is this will start to run out of steam, and coming into this short zone, it will become viable as a short sell. So we'll look where we're at. And as I said, I might consider taking this maybe slightly earlier, just depending on how this hourly unfolds, because at this point on your hourly, you're well off that low and you're getting this. So a peaked stochastic oscillator. And often when that happens, you're impending your dip, as you can see. Most oftentimes you're down there or you're up there before you see that considerable dip. And this instance, that size would be our profit. So just looking at this 1 hour, okay, it might warrant an early exit. What I might do is take a half size now and then put a half size order higher up. So that's what I'm going to do. Okay, so I think if I take it at market, my stop loss could be something like that. And that would probably cater for entry too, should we be wrong. So I'm going to make this position fairly small. I'm going to put my take profit somewhere in there. Okay. So it's a bit over 1-to-1 sitting there. I think really my exit in this case is going to be something like that. So still a decent profit margin there. So in fact, what I'll do is I'll add slightly more, I think, just to make this position more viable. So under a 1% risk overall. And I can obviously remove that pending limit in a sec. What I am seeing now is just a bit of momentum. So I'm going to hold off doing anything just yet until we see, if we see some kind of kickback, then I'll probably just enter at that point. But at this point, it looks like, at least on your lower time frames, you might just continue going up because you can see price isn't yielding a lot. Okay. And it's likely that's happening because on your, from the major view, if you like, you're still not there really where you should be or where price would be most likely to stop. If you swap onto the monthly, what you can now see again is this very, very key level about where I've drawn the limit for that price. Okay, so preferably it would be the very top. Okay, and it would be slightly higher. But what you can say as well is really the trade-off of taking it now, if you like, is the fact that we don't miss a trade with a decent setup. We're not desperate to take them by any means. And you'd probably rather get the best price. But, if the validity of this setup is very decent. So I'd probably rather sacrifice the 15 pips, just to make sure I got hold of it. So if I did take it now, just stop drawing dots. I could put my stop somewhere up there, most likely. So now the trade has become 1-to-1, but of course the probability of being wrong has also dropped. Okay, so what I'm going to do is I'm still going to hold it off because you can still see that momentum. And I think as soon as that momentum ends, that's when I'm going to get short. And I will basically place my entry. So really still the momentum coming in on this asset. You can see that wildly now across the board. If you look at the percent gain on this today, it's like 1.5%, I think. Probably says that somewhere on here. This is Trade Locker, by the way. Okay, so 5 minute, still dawdling up. we're still not dropping, so the momentum's there. Can see now it being squashed a little bit. Okay, so I can always move my targets around, I suppose. So I'm going to kill that order off so it doesn't fill. Only other pair I was interested in was the New Zealand yen. So what I may do as well, see if I can take 2 trades. So the New Zealand yen looks okay as well for a short. Again, I like this level. So what I might do is actually just take half of each, I would say. That might be ideal. Yeah, I think I'll do that. So, right. So I pre-planned this one a little bit already. If I put my stop probably somewhere up there. Okay, 88.9. My take profit on this again is going to be fairly close, but somewhere in there most likely. My risk I'm just going to drop. And I'm going to fire this one off like that. So I'm in on the New Zealand yen. So just for everyone to be clear, it's because you've got key resistance across the board. Your stochastic oscillator is way up, and it fits other parameters that I look for overall, which I'll discuss, later down the line. But I like that New Zealand yen short for that reason. And you can also see it's the same as the AUD CAD, straight off the low, and really there isn't any kickback. You're not seeing any development in the short side bias. This is still not quite there. You are trying. But again, the longer I wait, the more likely it is that it's going to occur without me. So I think what I might do is just settle for a worse ratio, essentially. But I'll get the trade on and I don't have to think about it anymore. So I'm going to drop this size just to make it a bit more attractive. I can go for the daily just to check the target. So the target and the stop loss in this case is going to be equidistant. Normally I would do a half risk now and a half risk later, but what I'm going to do is just cover the whole area. And it's going to be a short there. So I've got a short on my New Zealand yen. I've got a short on the AUD CAD, and I'm going to leave my bid down where it is on the euro pound, because I think that's decent. But I think you've got a little bit of a way to go there till you can get long. So what we'll do is we'll see how those go. There's 2 trades, AUD CAD, New Zealand yen, both at key resistance. Both have brought themselves up for a very long time, and fairly confident on what we'll see with those. So we'll carry on, see where we end up. So seeing a lot of risk off come into the markets on this day, but I did close out that New Zealand yen for gains there. So PL was 627, net PL after swap fees was 585. I killed off some of these very minor entries I took just because some of them I wasn't happy with. The euro pound did extend a bit and the SPX has stalled a bit. So it was good I got out of those at very, very small losses, apart from the euro pound. But overall, my new entry was fine, and that was another $626, putting the balance now 1,424 up after 2, I would say, serious trades, which obviously was your ZAR and your New Zealand yen, and those minor losses really negligible. The AUD CAD that we placed is also still in gains. I moved the entry slightly for this because of the price action and where I wanted it. My take profit is not a million miles away, and it would just come at some very early support as well, a bit like that New Zealand yen did. I probably could have held on to that New Zealand yen a little bit longer, to be fair. Still getting used to Trade Locker. The New Zealand yen we'll just look at. So overall, you probably end up getting a bit lower, I'd imagine. But I just wanted the gains on the table, especially with the account being fairly early on. So if this AUD CAD kills for gains, it should bring us nearer the 2K mark on the first few trades, which is decent. Whether we'll get more, we'll find out shortly. I'm about to go over markets and have a look, but I'm happy with that as a target on your AUD CAD. The AUD CAD does most of the time move a bit like this. You can see it's very jagged, it's very sideways. So I wouldn't expect it to rush to my target, but I'm always keeping an eye on the trade development as it goes. And I may consider moving the take profit if I choose to. The stochastic oscillator peaked and stalled and peaked and stalled. So not looking terribly convincing for a sharp fall like this, but there's certainly the case for a drop. And you can see in many of these pushes to the upside, you don't really get a very big rally before you fall. And the biggest factor really overall is this. So it's the case for a short based on that rally, 84.4 to 90.04. Okay, 600 pips straight up with no pullback, no significant red pullback. That is rare. I mean, if you look at down here on my screen, 85.7 to 89.1. Okay, that's not as far, and yet still you get this big red block before a continuation. So it's rare. I mean, the only other time is probably this one, where you have a big drop and then the rally's continuous. So it doesn't happen very often, is basically what I'm saying. And the majority of the time, it's going to have some falls in there. Even this one, it did have some of a red candle. It didn't show a lot of downside, that one. But barring that move, more or less, most of the time, a rally of that magnitude is going to give you something. And all I'm asking for as well, remember, is a drop back to local daily support. It's not a reversal of the market. I mean, it's literally a pull of 94, like we said, 0.94 to 892. It's 120 pips. It's really not far. And you've seen it many times before. So that would be decent, and it will get about $500. So we're out on that New Zealand yen for gains. Took these minor ones off that I wasn't quite happy with. Probably would have been okay leaving them. But we're just waiting on this AUD CAD, and I may look at some other entries we could take. So this AUD CAD we took in the previous video actually swiped down here while I was asleep. You can see I got, well, you can see how close I missed it. I missed it by, I don't know how many pips it is, less than one perhaps, which happens. It does happen. It's not the end of the world. Maybe I should be a bit more tighter on my targets. I still think you'll probably get there. But I would say it's now a little bit more concerning because, you've then got your push up. This overall move and this target anyway was quite loose, if you like. I think the price could easily go under that in the future. So what I may do is consider just creating this a no loss situation. So that means I'm just going to basically put the stop loss where my entry is effectively. So I got in 90330. Okay, so I can just put the stop loss at like 30, right? So now I'll lose $20 or so on that entry. What I will do is actually just move it slightly lower. So I've got swap as well. So what I'll do is I'll put it a little bit under at about 2.3. Okay. And so there we are. Now my take profit will still sit there. Like I said, I think you'll probably fall through here eventually, or at least come as far as 88.9. But if we have news today on a Friday and we don't really, get too quickly near that way, I'll probably kill it anyway. I don't really want to hold it over the weekend. But nonetheless, it comes, again in a row. We close these minor entries over here. But ultimately, last was 585 net on a 626 profit with a 38 swap on the NJ. And now you've got this AUD CAD. Looking ahead to next week, there are some entries which may be ideal. I think gold, if you can get gold a little bit lower, it's probably going to be okay for long. Certainly dip buying on gold is a good idea if it's done, in the right manner. At this point, it's not really ideal, I would say, just because you've had a bounce and it didn't really do anything. Your stock oscillator is still very low, don't get me wrong, but I think there's room certainly lower. I would say nearer about, you just get one of these horizontal lines, nearer about 297, I would say. If you just go on your weekly, you can see a bit of key support there. So about there is probably where I would put my bid as a light long. And I would do that lightly just because, at levels like this, you could get a massive thump down, which pulls you well towards those higher MAs. And as you know, gold has been somewhat of a permeable market. It's gone up and up and up and up and up and up continually. So the chances of you being wrong on either side really can increase, because if the market does dump to the south side, even sort of buying it as a trend trade isn't going to be ideal. So that could easily happen here. You could easily have a bigger retracement. Having said that, a dip back there is like $600, almost straight down, barring that that slight green candle there. So that's something I might consider. And the euro pound, which I actually removed before, it's bouncing around. I think if you do sort of miss around into next week and get nearer this point, nearer 83.5, that might still be ideal. But if it's going to happen, you would really need news today to sort of pile in and give you some kind of short side bias, short side impetus. You can see that the price action here really isn't doing a lot. It has hardly gone anywhere. So, coming down to this area of key support and essentially demand, where you saw a big push before, is likely to be ideal. So gold, the euro pound, and look okay on the cards. The other one as well is pound dollar. So pound dollar might be okay if you come a bit higher. You can see that on the weekly. And there's also a key long zone below. So I'll probably go over this if we end up taking it. But there's a range of trades that could be taken, should the market move to where it needs to go. So we'll wait and see how that goes, and we'll go from there. See you in the next one.